Hello everybody, Jackson here with the Wealth Squad. Today we'll be talking about simplicity and why you should just invest in the SP 500. Make things simple for yourself, save time, save money at the end of the day, as well as you have a sense of relief in the back of your mind. You do not have to pick stocks anymore. The stock picking will be done for you essentially. So we're looking at the SP 500 map today in finviz.com. This is a one-day performance. We could go year to date, see the damage done on technology, communication, consumer cyclical, and energy, the outperformance that it has shown. Now, with most portfolios, you're going to have a combination of tech, consumer cyclical, but you're not going to really, think about oil or energy. And that's where the index comes in because they think about it for you. It's part of the portfolio that you hold. So this is the year-to-date returns. Of course, the hurt stocks are offset by the outperformance in energy, so you're not losing as much. Now, what we are going to do is look at the SP 500 so far, get a sense of the returns lately. Not so good. Since COVID, you could see we're still up 15% within the last 3 years. Not a great time to be invested, but if you invested since COVID, not before but after, you're up a very nice amount. And with the SP 500, you could put in dollars monthly, right? You could put in $200 a month, just throw it at it, or $200 a week, maybe $250 a week, $1,000 a month. Throw it at an index. Best way to do it, M1 Finance. You could set up automatic buys with TD Ameritrade, E-Trade, and I believe Robinhood. Most brokerages you could invest with. You could set up automatic payments of these index funds that go directly in your account. And that's the best part because you do not have to think about it anymore. Just know that over time, the index will go up, right? That's if America goes up, America does not blow up tomorrow. We will outperform the inflation rate, right? That is simply what the SP 500 does. That's what it's made to do. Now, what is the SP 500 made up of? That's a great question. Let's check that out. So this site, Market Screener, you have the absolute breakdown of the SP 500 with Apple leading, Microsoft, Amazon. So Apple and Microsoft are the top holdings. They hold a collective 13%, just two companies out of the 500. So of course, everything after JP Morgan being the last company worth at least 1%, everything else is worth, of course, less than that. So you have most of your portfolio weight in these numerous companies: Apple, Microsoft, Amazon, Tesla, Alphabet, which is Google, Nvidia, Berkshire Hathaway, Meta Platforms, United Health Group, Johnson & Johnson, JP Morgan. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 companies hold at least 1%, with the other 489 holding less than 1%. But all those companies together make up one ticker symbol. And that's the beauty of it, because this is a result of 500 different companies performing at once. Some good, some bad. Obviously, not all stocks are going to be good during a specific time. But conversely, not all stocks will be doing bad at specific time. So sure, the market could be down 25%, but it could be worse because oil is up, right? Different types of stocks like that, industrial work is up, and not all stocks are down. But if you just have a technology portfolio made up of Google, Amazon, you have, random tech stocks in there like Roku, Peloton, you're going to get slammed. And that's the beauty of it because they diversify for you. You don't have to think about it because it is already done. So that's just the word for this Friday, is to think about it. Simplicity. It's not always the answer, but in stock market investing and stock picking, it usually is. Consider it. It's probably a good thing for you. That way you can spend more of your time focusing on how to make more money instead of how to grow your money, right? Leave the growing of your money to the so-called experts while you make more. Put that money that you make back into the market or in assets you can control, real estate, business. Those assets will ultimately outperform any index out there because they have you tied to it. You could alter the performance based on your work, based on your decision making within the assets, the business, and the real estate. So not all investments are made equal. Stock market, you don't really have a say in what a company does. When in real estate and business, you do. Ultimately, investing should be made up by you and what you do. So if you are going to invest in the stock market, at least passively put it into the index. Makes your life a whole lot easier. That's the video, guys. Thank you for watching until Monday, Labor Day. Have a great Labor Day weekend, by the way.